Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Tuesday, April 2nd. Oh boy, today it's one of those days in which you need the risk management because the floor failed open and a lot of people just went crash. There's a lot of red in this market. There's a lot of fear, a lot of people trying to buy those dips that were working for weeks and now they are getting destroyed. So if you are one of those, this is just one day. I hope you are learning something. Everyone should learn something when risk management fails, but you have to just think about how we can improve and how you can be better at this risk management if you get caught in the rug pull that today caused the market. There's no clear news, no clear statistic, no clear movement. It's just price action getting destroyed. So let's quickly review what the fundamentals said for today. The most important number for today was JOLTS job openings. It came basically as expected, 8.7 versus 8.7 and 8.7 on the previous one. Factory orders still in the positive, coming from the minus 3.8, and job quits basically more or less as the same as the previous one. So nothing big, just a lot of people speaking. Right now is Fedmaster is speaking, and she's not basically seeing rate cuts in the next FOMC, but that's just right now at 12 p.m. We had since a lot of during the overnight, a lot of sell-off. And let me tell you, the FedWatch tool still shows us that in May we are not going to see a rate cut. We are just going to, with 95% of probability in May, we are not going to see. But look at this on June. On June, more and more 50-50. This number was 65 a couple of days ago, and now it's 56. So more and more we are balancing between the possibility of perhaps no interest rate cut either on June. So watch these numbers as much as possible because I think the sentiment is continuously changing, and also the conflict in the Middle East, the Israel, the crude oil is just spiking higher. So let's just jump straight into the charts and see what's happening and how can you kind of avoid this if you are long, and also take this opportunity to get short. So this is the 30-minute chart. I always like to gather insight on the 30-minute chart, see how we are in the high time frame context. So as you can see, we are in a 1 hour fair value gap in here, and we got this liquidity down here and also this liquidity from yesterday. So in the 15-minute chart, you can see that, let me just remove and focus on the important part. We can see how during the overnight we tried to go higher. We dumped during the London Open. We trapped a lot of people going short, and then we spiked higher. Excuse me. So we got this liquidity that never got taken. And at the same time, this is the fib retracement, the golden pocket that I always use. And this is the 50% retracement. One touch and a second touch and a big rejection shows you that there's no willing, Nasdaq is unable to go higher. So there's a lot of pressure up here, a lot of wicks. First move and then the second move, and it's slowly grinding lower. I was tracking this. I would like for this to just trap bulls and then get the short, but that was the only concern. I was bullish, but after seeing that we were unable to trap this and continue higher, I was just tracking the inverses. This is the first fair value gap that got destroyed and ran through. The second fair value gap, and this is where I took my entry. I saw this, I thought, okay, I missed the train, and I took the other opportunity. I saw this push again, and I was just, okay, let's try to get a stop. So the stop is above the fair value gap here. The entry was right here, and I was just playing with 6.5 visual ratio. I was at that moment just targeting pre-market lows for a rotation lower. I never expected this kind of move. Never. And well, this is a 42 move, 800 bucks. That's pretty welcome. And I didn't want to chase the price action because if we check the 15-minute, there were a lot of people getting destroyed. All this liquidity, all the liquidity on the left hand side on this big pivot that we got here. Let's go to the 1 hour. On the 1 hour, remember that we push higher, we slowly drag down, and we bounced from this zone on the golden pocket from the entire move. After that, that pivot was also one of my targets. Let's see how the price behaves there. And how the price behaved was basically melting down. These kind of moves are huge. You cannot just see it correctly, but from this to this, there's 74 points. From this to this is 100 points. And since the big flash until the open, it's 127 points. Excuse me. Let me drink a little bit of water. Okay. So from the high of pre-market, the high of the London Open until the open of New York, 223 points of just meltdown. Meltdown after meltdown after meltdown. So please don't catch a knife. If you were trying to just buy the dip as usual to just expect this kind of price action, you just have to take the stop below the low of the day. That's a necessity because this went lower and lower and lower, and we just took this liquidity down here and we stopped. But look at this move. This move is insane. Nasdaq right now is 1.30%, and since the open we are just distribution. After the huge move down, we are just distributing. We are just letting people buy, covering those shorts, and there's still a possibility because look at this. I have from my highs to the lows. Let me just adjust this. I have this golden pocket here and this 50% retracement aligned perfectly with, let me just highlight it also on the 30-minute. This inverse fair value gap is basically quite juicy for the people willing to reshort. So if you think that Nasdaq is going to do things like that, reassess your bias, because I think people will just take the opportunity at this zone to basically smack the Nasdaq again. We are now breaking the huge range with momentum to the downside. See the bigger picture. Let me just remove everything. Let's just analyze the bigger picture. We are right here after a big momentum play. There's a lot of liquidity down here. Most probably we will continue in lower after all the momentum that we saw here, and the rest of the week is going to be insane volatility. So just take a step back, assess the higher time frames, because I think we are just we changed the price action, the sentiment on the Nasdaq. And also Apple, it's melting down. Microsoft is melting down. Tesla is melting down after reporting really bad deliveries numbers. Amazon is melting down. Nvidia is melting down. Meta is the only thing that is barely holding. So let me just this. So the Nasdaq is being destroyed. The S&P is also, look at this candle. This candle is huge momentum to the downside. Crude oil is just ripping at $85 per barrel. Just taking this pivot on this contract, and it's quite bullish. Dollar went nuts during the overnight, and then we just melted down. And the bad thing is not the dollar. The bad thing is that the 10-year yield is skyrocketing. It's skyrocketing. 4.35 right now with a huge move higher, breaking all these weeks to the upside. The 2-year yield also tried to move higher. It's not as big as it was, but treasuries are in the red, breaking down this support zone to the downside. High yield corporate bonds, the young bonds, are basically also from top to bottom rotating to the downside. The small caps is minus 2% with a huge gap down. Let me just take this real quick. So there's a lot of confluence in other markets that are basically screaming, this is risk off, this is profit taking, this is just not good for bulls. We are just changed. Gold is the refugee for a lot of people. It's quite in the green, 1% today. Financials are all in the red. Energy and utilities are the only thing. Look at this XLE sector fund. Huge move to the upside. All this is inflationary pressure. Everything is just fear. Fear, take profit, selling pressure, just dumping everything and rotating into defensive. I told you in my weekly recap, I told you yesterday, I think there's a change in sentiment, and right now we just saw a huge breakdown that I don't think this is over. I think there's more liquidity to the downside in the 4-hour. We can see there's a lot of things down here that I think are targets, and then down here we might see some kind of relief. But let me tell you that something has changed today. If you followed today's price action since the overnight, you saw that there are a lot of momentum. Look at this. This was the RSI on the Nasdaq when it all started. That was 65, and the bottom was 12 on the RSI, and it continued lower for more than 100 points. So this is just insane weakness, insane pressure. So there's a lot of money getting out, and more than that, the internals are looking pretty damn bad. The volume on the ES, on the S&P is just going out. The advanced decliners is just lower as hell. Peak chart is not even able to go above 0. And the Nasdaq is more of the same. Volume, look at this. Volume is huge to the downside. Decliners at the barely minimum. Look at these decliners. And the tick is also not even one tick, 1 and 2. 1 and 2. So the internals on all these markets are super weak. And you have to really learn when to buy the dip and when you have to think twice about, okay, what is happening here? And that's one of those moments. If you get caught on it trying to buy the dip, I hope you applied risk management. If not, just review your trades and try to be better in the future. We all do those mistakes. Don't push your head to the floor, to the wall. Just learn from your mistakes. But let me tell you that I think this is the start of a rotation, at least this week, to the downside. There's a lot of money, a lot of momentum to the downside, and other markets are basically risk off and also rotating into defensive sectors. So that's my warning for you. I really hope you agree with me that risk management is the most important thing and you didn't blow out in this sell-off today. And that's all from my side. I hope this video is useful for you. If it's useful, please support the channel, give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. I hope you didn't get caught today. If the red is huge, it's just one day. manage your risk more than ever. Be prepared for the rest of the week's volatility, because I think this is just started. This just started. There's more potential to downside. There are key zones, and I think every kind of bounce is going to be met by really big sell pressure. So remember that discipline, patience, and risk management in capital letters are your best tools for success. Stay safe, everyone, and see you tomorrow.